Welcome back, everyone, to NYU Grads Daily Podcast. Today is Monday, December 4th. Hope you all had a great weekend as well as first day back for the work week. Let's go ahead and jump right in to the session and the data. So today we had on the new highs list, we had 441, which is great. And again, we are outpacing the new lows at only 105. So we're about, for the past few sessions, we're outpacing new lows roughly about 3x on average, which is great. Volume was pretty decent today. 24% of shares are below the 50-day moving average, and 41% are below the 200-day moving average. About 45% of shares were advancing versus 50% declining. A couple things that stuck out to me were that the Magnificent Seven, for the most part, I think all of them were closed down red. So that's not a good sign. One of the things that I noticed, and I mentioned on the last podcast, that gold was spiking, making new highs. In historical terms, what I typically remember seeing is gold will try to break out after those new highs, and then it'll get kind of smacked down, and that's what happened today. So gold pulled back. Yields also fought back today. Now, it might have been a few sessions before I went into the three pillars for a Santa Claus rally. Let's just refresh everyone's memory. Number one, you had interest rates, or the 10-year yield, below 4.5%. That was one ingredient. The second one was the majority of the Magnificent Seven doing very well. Or I should say not doing very well, but at least over its 50-day moving average, holding their own. And then the last ingredient needed for a Santa Claus rally was improved breadth. Because if you remember, when I kind of created these three pillars back after the summer, we were going down, selling off pretty hard, and only one of the Magnificent Seven were above its 50-day moving average, Microsoft. Everyone else had lost their 50-day. And then you had, on a daily basis, whether we had a green or red day, where we had like 1,000 new lows and only like 20 new highs, if you recall. So that's where these three pillars came from. And right now, you have interest rates in the 10-year yield well below the 4.5%, which is good. You also have majority of the Magnificent Seven above its 50-day moving average, which is good. And you have breadth that is new highs are outpacing new lows. So all three ingredients are there. And if you recall, I just needed two of those three to say there's probably going to be a Santa Claus rally. Now we have all three. So we're right now in maintenance mode. Things are safe. Things seem to be pretty chill. Even if the market sells off 10%, there's nothing to really be worried about, right? Because that would be a natural pullback after such a huge rally. But there's still things to look out for, right? For me, another thing that stood out, this is more intraday mechanics, the NYSE up volume, down volume, which is called Vol D. I track this on a 5 or 15-minute basis intraday. For the past few sessions, it's been very strong to the upside, NYSE up volume, right? So this metric that I use is showing you the up-down volume. So even if like the market isn't up that much or that isn't down that much, it shows you the volume in which the market is moving, whether to the upside or downside. And this gives a very clear signal on intentions. And today I noticed we were kind of just waffling around, and I looked at the Vol D, and we hadn't gone anywhere. It was like in a very, very tight range, basically not moving. So that tells me today the Monday session was kind of a consolidation, take a breather after such a big run up type day. And unless that moved up higher or down lower, I just felt we were just going to drift around. And that's exactly what we did. But looking at the last, I would say 20, 30 days on the NQ, um, you're going to have to watch out for this 15,860, 880 level. We broke that trend line and we might just be back testing here before we go lower. But we only have like a few, 2 total weeks of trading left in the month of December. There really would have to be a catalyst um, for yields to move higher above 4.5%. I think if there's a catalyst like a black swan or Jerome Powell at the next December meeting says, "Hey, we were wrong and we actually need to raise rates in December." Like outside of that or a black swan, we're probably just gonna limp into the new year and in around this level. Um, yeah, I really would need to see catalyst. Um, and when I take a look at what was strong, it's all the not junk, but companies that are high beta, high risk. Many are like on the most shorted list, so a lot of these companies are bouncing because of short squeezes. Give you some examples. Carvana up 13.8%. PJT Partners up 8%. Coinbase up 5.4%. K Hovanian up 4%. FNGD, which is opposite of, which is the bearish of FANG, is up 3.87. The VIX was up 3.5 today. The SOX S was up 3.48. NVIDIA short ETF was up 3.24% because NVIDIA was down. So a lot of these inverse ETFs were up. Affirm Holdings was up again, 2.36%. Uber was up 2.2, GM up 2.19, TriPoint Homes up 1.9. Then you had what was weak. Some of these were on the what was strong list yesterday. VinFast Autos down 9.95, DraftKings down 4.6, Instacart down 3.7, Silver down 3.7, Lyft down 3.6, Klaviyo down 3. So it's a mixed bag, but nothing like in the mega cap land was too alarming, right? Like you're going to have the Magnificent Seven down, but they're just pulling back here. Microsoft was down 1.4, Nvidia down 2.6, Google down 2.02, Amazon down 1.5, Apple down 0.95%. So let's wait and see what happens midweek. But that's really all I have to report today. Keep watching yields. Keep watching the Magnificent Seven. That's all I have to report. And thanks for all the new subscribers. Don't forget for the new folks to subscribe, to follow on Substack Notes, because I do post things intraday as well. I'll see you guys after the Tuesday session.